The market does not crash the way people expect. It does not warn you. It does not give you time. And when it happens, most portfolios get exposed instantly. In this video, I am going to show you 3 stocks that are built to survive market crashes, generate consistent cash flow, and quietly outperform when everything else starts falling apart. These are businesses with dominant positions, recurring demand, and pricing power that allows them to keep operating regardless of what the economy is doing. And if you understand how to position your portfolio before volatility hits, you do not just protect your capital, you compound it. Let's get into the first stock. The first company is Rollins, ticker symbol ROL. Now this is a business most investors completely overlook, and that is exactly why it is so powerful. Rollins operates in pest control. At first glance, that might not sound exciting, but that is the point. The best defensive businesses are not built on excitement, they are built on necessity, and pest control is one of those services that people do not delay, especially when there is a real problem. If your home has termites, rodents, or infestations, you do not wait for the economy to improve before fixing it, you call immediately. That creates demand that is not tied to economic cycles. Now here is the key insight. Rollins operates in a highly fragmented industry, but it has built a massive national and international footprint through its brands and service network. That scale gives it a significant advantage, because it allows the company to operate efficiently, expand into new markets, and acquire smaller competitors over time. And that acquisition strategy has been a major driver of long-term growth. Now let's talk about what really makes this business resilient. Recurring revenue. A large portion of Rollins' revenue comes from ongoing service contracts. Customers do not just call once, they sign up for regular treatments, monthly, quarterly, annual. That creates predictable cash flow, and predictable cash flow is what keeps a business stable during uncertain periods. Now think about this from an investor perspective. When markets crash, companies that rely on one-time purchases see demand drop quickly, but companies with recurring revenue continue to generate income. That is the difference between volatility and stability. Now, according to the article, Rollins continues to deliver steady revenue growth and strong operating margins. This is not a business that depends on aggressive expansion to survive. It grows steadily, it maintains profitability, and it compounds over time. That is exactly what you want in a defensive stock. Now let's go deeper into the moat. Brand trust. When it comes to pest control, people do not experiment with unknown providers. They go with companies that are established, reliable, and proven. That trust creates customer retention, and retention drives long-term revenue. Now here is something important. Rollins has pricing power. Because pest control is not a discretionary service once the problem exists, that means the company can adjust pricing without significantly impacting demand. And in an inflationary environment, that is critical. Now let's talk about margins. The article highlights that Rollins maintains strong profitability. This is important because high-margin businesses have more flexibility during downturns. They can absorb cost increases, they can continue investing in growth, and they can protect shareholder returns. Now here is where it gets interesting. Rollins also benefits from long-term industry tailwinds. Urbanization, climate changes affecting pest behavior, increased awareness of health and sanitation. All of these factors contribute to sustained demand. This is not a short-term trend. This is structural demand. Now let's bring this together. You have a business that provides essential services, you have recurring revenue, you have strong margins, you have pricing power, and you have long-term growth through acquisitions and industry trends. That combination creates resilience. Now here is the real question. If the market drops sharply, do you think demand for pest control disappears, or does it continue? Because that answer tells you everything you need to know about this business. Now think about investor behavior during a crash. Most people panic, they sell, they move to cash, and then they miss the recovery. But investors who own businesses like Rollins are in a different position. They are still generating returns. They are still holding companies that continue to operate, and that gives them the confidence to stay invested. That is how long-term wealth is built, not by timing the market, but by owning businesses that can survive it. Now before we move on to the second stock, think about this. If your portfolio was made up entirely of companies like this, how differently would you react during a downturn? Because that mindset is what separates successful investors from everyone else. Now here is something important before we continue. If this resonates with you, you're exactly who this channel is for. People who are ready to stop losing money in the market and take their investment portfolio to the next level. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Now the second company we are about to break down operates in a completely different space, but it has one of the strongest relationships with governments and institutions you can find, and that creates a level of stability that most businesses simply do not have. The second stock is Motorola Solutions, ticker symbol MSI. Now this is a completely different type of business from what we just discussed, but it might be even more powerful from a defensive standpoint, because Motorola Solutions operates at the center of mission-critical communication. This is not consumer electronics. This is not optional technology. This is the infrastructure that police departments, fire services, emergency responders, and government agencies rely on every single day. When something goes wrong, this is the system that keeps everything running, and that creates a level of demand that is not tied to economic cycles, because governments do not cut back on public safety. They do not delay communication upgrades. They do not reduce spending on systems that are essential to operations. That creates stability. Now here's the key insight. Motorola Solutions does not just sell hardware, it provides integrated communication ecosystems. That includes radios, software platforms, command center solutions, and ongoing service contracts. This is a full-stack solution, and full-stack solutions create lock-in. Now think about this. If a police department builds its entire communication system around Motorola Solutions, switching to another provider is not simple. It involves retraining personnel, replacing infrastructure, reconfiguring systems. That creates friction, and friction creates customer retention. Now let's connect this to the business model. A significant portion of Motorola Solutions' revenue comes from software and services. That means recurring revenue, and recurring revenue is what makes a business resilient during downturns, because it provides visibility. It provides predictability, and it reduces dependence on one-time sales. Now, according to the article, Motorola Solutions continues to generate steady revenue and strong cash flow, supported by long-term contracts and government relationships. This is critical, because government contracts tend to be long-term, they are not easily disrupted, and they provide a consistent stream of income. Now let's talk about margins. Motorola Solutions operates with strong profitability, especially within its software and services segments. And this is where the business becomes even more attractive, because software carries higher margins than hardware. That improves overall profitability, and higher profitability means more flexibility during uncertain periods. Now here is something most investors underestimate. The switching costs in this business are extremely high. Once a customer is integrated into Motorola's ecosystem, leaving becomes difficult, and that creates a durable competitive advantage, because it protects market share. Now let's go deeper into growth drivers. Public safety technology is evolving. There is increasing demand for advanced communication systems, real-time data integration, and intelligent command centers. Motorola Solutions is positioned at the center of that evolution. It is not just maintaining its business, it is expanding its capabilities. Now think about how this plays out during a market downturn. Companies that rely on discretionary spending see demand drop, but Motorola Solutions operates in a sector where demand is essential. That creates stability, and stability is exactly what investors look for when markets become volatile. Now consider this from a portfolio perspective. You now have Rollins providing essential home services with recurring revenue, and Motorola Solutions providing mission-critical infrastructure with long-term contracts, two completely different industries, but both delivering the same outcome, predictable cash flow. Now here is something important. Motorola Solutions also benefits from long-term visibility, because government contracts and enterprise agreements provide clarity on future revenue. That reduces uncertainty, and reducing uncertainty is one of the most valuable things a company can offer during volatile periods. Now let's bring this together. You have a business with strong government relationships, you have recurring revenue from software and services, you have high switching costs, you have strong margins, and you have long-term growth through technological evolution. That is a powerful combination. Now here is the real question. When markets crash, do you want to own companies that depend on consumer spending, or companies that are funded by essential government budgets? Because that distinction matters. Now think about investor behavior again. During downturns, capital flows towards stability. It flows toward businesses that continue to operate regardless of economic conditions. And Motorola Solutions fits that profile perfectly. Now, before we move on to the third and final stock, I want to share something with you. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now the third company we are about to break down operates in a space that almost every consumer interacts with daily, but very few investors truly understand how resilient the business model actually is. The third stock is Murphy USA, ticker symbol MUSA. Now this is where things get really interesting, because this business sits right at the intersection of necessity and consumer behavior. Murphy USA operates fuel retail locations, primarily located near high traffic areas and major retail hubs. And while fuel might seem like a simple product, the economics behind this business are far more powerful than most investors realize. Let's start with the obvious. Fuel demand is incredibly resilient. People still need to commute, they still travel, they still rely on transportation for daily life. Even during economic downturns, fuel consumption does not disappear. It may fluctuate slightly, but it remains a core part of everyday activity. That creates a steady demand base. Now here is where Murphy USA differentiates itself. Its business model is built around efficiency, low-cost operations, high volume, strategic locations. This is not a company trying to be premium. It is focused on delivering value and capturing consistent traffic, and that strategy works especially well during uncertain economic conditions, because when consumers become more price-sensitive, they gravitate toward lower-cost options. Murphy USA benefits directly from that behavior. Now let's go deeper. According to the article, Murphy USA continues to generate strong financial performance, supported by consistent fuel demand and in-store sales. This is important because the business is not just about fuel. It also generates revenue from convenience store purchases, snacks, beverages, everyday items, and these add-on sales carry higher margins. So while fuel drives traffic, in-store sales drive profitability. Now think about how this works. A customer comes in for fuel. They step inside, they make additional purchases, that increases the overall transaction value. And over time, that creates a powerful revenue model. Now here is something most investors overlook. Murphy USA benefits from scale and operational efficiency. It can manage costs effectively, it can optimize pricing, and it can maintain margins even when conditions change. That flexibility is critical, because in volatile markets, companies that cannot control costs struggle. Murphy USA does not have that problem. Now let's talk about resilience. During economic downturns, consumer behavior shifts. People become more cautious, they look for value, they prioritize essentials. And that plays directly into Murphy USA's strengths, because it offers exactly what consumers are looking for: affordable fuel, convenient access, and low-cost options. Now here is something important to understand. Murphy USA also has pricing flexibility. It can adjust fuel prices based on market conditions while maintaining competitive positioning. That allows it to stay relevant regardless of external factors. Now let's step back and connect everything. You have Rollins providing essential pest control services. You have Motorola Solutions delivering mission-critical communication infrastructure. And now you have Murphy USA operating in a high-volume, necessity-driven retail model. 3 different industries, 3 different business models, but all built on the same foundation: demand that does not disappear. That is the common thread, and that is what makes these companies resilient during market crashes. Now here is the bigger picture. When markets fall, the biggest losses typically come from companies that depend on growth expectations, companies that need perfect conditions to perform, companies that rely on consumer confidence. But the businesses we just discussed operate differently. They generate cash flow, they provide essential services, they maintain demand regardless of economic cycles. And that is what allows them to survive. Now here is the question you need to ask yourself. If the market drops 20 or 30%, which of these businesses do you trust the most to keep performing? Is it Rollins with its recurring service model and essential demand? Is it Motorola Solutions with its government-backed contracts and high switching costs? Or is it Murphy USA with its volume-driven retail strategy and consistent consumer demand? Let me know in the comments, because your answer reveals how you think about risk. Now let's bring this home. Investing is not just about chasing upside, it is about managing downside, because protecting your capital during difficult periods is what allows you to compound over time. And the reality is simple. You do not need to predict every market move. You just need to own businesses that can withstand them. That is how you stay in the game. That is how you avoid panic. And that is how long-term wealth is actually built. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the StocksGalore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/StocksGalore and become part of our growing community of smart investors. Link is in the description. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.